Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, I'm going to go to a pattern, a two time frame pattern that can be traded in any two time frames that you want. In fact, when I started learning this pattern, I was trading S&P E-mini on tick charts, and it will work. And when I started to look at it with stocks, I started to expand the time frames. I noticed that the weekly and monthly time frames together worked really well with this specific strategy. So let's go ahead and get into the agenda. So we want to talk about, again, a two time frame setup, all right? The higher time frame, lower time frame. And I want to go through the specific criteria that I'm generally looking for and on both time frames, essentially, and what I would call an opposing trend pattern. Now, originally, I used to refer to this as an opposing trend trigger. That came from Don Miller, who was an S&P E-mini trader and believe still is, but he taught an approach as to how to look at two different time frames together. And so I've used other criteria. I don't use the same moving averages he does. I've added in some other influences like Linda Radke. But what I'll tell you is that if we get a combination of trend that has some range to it, a stock that moves and has some average true range, and then also has momentum associated with it, we have the makings of a really nice two time frame setup. So we always want to confirm, and I'm going to go through the criteria for the momentum as well. Once we're through with that, we'll go through the individual stocks that came through. So let's go ahead and get into this lesson now. Okay, I'm going to use Microsoft, and I'm actually going to use a weekly and a daily. As I said, this can be used in any two time frames that you want. In fact, Don Miller, I've heard him quoted as to saying that if you have these two time frames and you learn this approach, you can do it pretty much like trading pumpkin seeds if you want. If you have the data, if you have enough data, if you have the open, high, low, close data on basically anything in two separate time frames, you can use this approach. So the way I look at it is I start with the higher time frame and I'm looking for trends, pullbacks to trend support. So I'm looking for a time frame that is trending to the upside, all right? And preferably we're making higher highs and higher lows. Okay, that price, we always want to start with price and look at it in those terms. Now, here is we're kind of working sideways and then we break out, we make a new high here, all right? And then we get a pullback to what I would call trend support. Trend support to me is the 18 MA. Now, it can be slightly above that line, it could be slightly below, but in the area of the 18, right? Whenever we get pullbacks in the area of the 18 and it's rising, all right, to me that's trend support, then I think I've got the makings of a potential trade. Now, the supporting evidence is the 40. I want the 40 MA to be rising at or at about the same rate. All right. Now, I like them to look somewhat parallel. Now, it's not always going to be perfect, and the slope of those moving averages could change. If you notice, they're sloped this way at this angle here, and then here they've got a higher slope, but they're going at the same rate. So I really like that as a criteria, but sometimes you'll have a move where the 18 is starting to climb at a little bit faster rate, and I'm still okay with that. What I'm trying to avoid is one of these deals where the 40 looks like that and the 18 looks like that, all right? So if we have that, we can play pullbacks to trend support. This is trend support. Now, that's the higher time frame. This is the basic criteria of what I'm trying to find. So that's the higher time frame. The lower time frame is again what I call this opposing trend pattern. And I call it instead of calling it a trigger, there are 4 different types of triggers that I use. But the pattern that I'm trying to identify that tells me that I have a setup is I've already described what I'm looking for on the higher time. On the lower time frame, I actually want the 18 to be below the 40. Okay, so while this is above the 40 and both lines are rising, on the lower time frame, I want to see the 18 cross down below the 40. All right. Now, if I have that and price closes below both moving averages, I now have an opposing trend pattern or an overall setup in two time frames. I know I'm set up. Now the question is it going to trigger and how is it going to trigger? For that portion, I want to go and look at the momentum characteristics. Now, in terms of whittling down, because you could find a lot of stocks that meet this criteria. So what I like to do is whittle it down to a workable number. And the way I would go about doing that is look for certain criteria. Number one, when I make a new high, I want MACD to also make a new high. So I'm going to compare this peak and this peak. We make a higher high. Okay, this is not divergence. I don't go way back here. I'm comparing the last two peaks, and this is confirming, all right? And then I can confirm this peak to this peak, and we're getting confirmation. I can compare this one to this one. Each successive peak was confirmed by MACD. It was also confirmed by ADX, the blue line here. And it doesn't have to make a higher high. It just needs to make a peak above this 25 line. And if we have that, we have confirmation, both MACD and an ADX, that we can play a pullback to trend support. We're looking to play a pullback to trend support. All right. So those are the so we're looking for that criteria on the higher time frame. On the lower time frame, again, to whittle it down during these declining phases, I want to look at the lower time frame, and I want to look at how strong the selling is. And we're going to evaluate that, and it's going to help us determine how quickly we want to get long. If there's not a lot of selling strength, then we probably want to get long very, very quickly. And in fact, there are times where there is a trigger one, where we actually get in even before the 18 crosses down below the 40. There's a couple rules that are associated with that. But what I'm trying to tell you is here, if we have a pattern that shows trend indications of a trend to the upside that is confirmed by momentum, all right, and has now pulled back to trend support, which I defined by the 18 MA in each time frame, and also shows a pattern where the 18 has corrected down to the 40, okay? And during that time, we have a close below both moving averages. If we have that, we have a setup, and now we're going to use these indications to determine how quickly we want to trigger ourselves back into the upside. Now, typically, I will look for the first two trades. This is the third trade, sometimes a little aggressive, but as long as these two moving averages are moving at this rate, you can continue to take one trade after the other. In this instance, on this last one, for a lot of the people that have taken the course or studied the course, yeah, this showed some strength to the downside. It didn't really have enough of a hesitation here. I would have probably been waiting for some kind of a pullback, any kind of a higher low here that never came. It just kind of went up and took off. So I would have missed this trade, but these two you would have had triggers for and been in for nice wins. So the goal here is to identify an approach that you can use consistently, and you can find in any two time frames, all right? And I think if you can do that, you can create yourself a trading plan that I think offers you opportunities on a regular basis. If you're enjoying the content, please hit that like button and subscribe. So just briefly, my services can be found at rabelstockresearch.com. That includes the trading course. In fact, there's two courses now. I call it a trading school. I'm going to continue to add more content on there over time. But the individual package has 2 to 3 reports each week, and you will automatically have access to the trading course if you sign up. So go to rabelstockresearch.com/services to take a peek if you're interested. Let's go ahead and get into the individual symbols now. Okay, I'm going to start with the GLD and follow up on what we've been talking about, especially with respect to this lesson and the reason why I use two time frames. So let's just look at this pullback that took place here. We had lower high, lower high, lower high, right? 3 red bars, 3 down bars, 3 bars where we close below where we opened. That's why they're red. And then we had the same pattern here. You see that? But if we use a single time frame, and I used to do this, the moment this would take out the high of this bar, so we get lower high, lower high, lower high, then the trigger would be coming up through this bar. Well, in this case, you would have been taken in, and then it immediately would have turned on you and taken a loss. Now, it worked in this case. And I found this to be really frustrating. And so what I started to do was dissect what was taking place on the smaller time frame and look at what took place here on this pullback, which is the one that was the winning trade. We went into the zone, we came out, we did not go to a new low. And I'm telling you, I am salivating on this bar right here. It's a great, great entry. On this setup, we had moved to the downside, and we move up and we come down, but we never close above the 18. We never close above the 40. We didn't even get a whiff of the 40. We had an overrun here, so we know we're not in a big hurry to buy the first move to the upside anyway. There's just no trigger here. Beautiful trigger here, no trigger here. So this is what I found. I didn't expect that when I looked back on this. I was actually just going to show the most recent pullback and why I wouldn't have taken this as a setup. And now we're breaking the 18 week, and it's probably going to come down a little bit more and even maybe come all the way down to the 18 month. So it kind of saves me by using this smaller time frame. It was a bonus that there was actually a great setup coming back here, which gave a really nice profitable swing. So this is the whole purpose of why I like to use two time frames. Obviously, there are some rules that you got to learn, but once you do, I think it can be a huge advantage. All right, let's move on to the next symbol, which is the TNX. So I did want to just talk about rates a little bit. We have this monthly chart that's shown this big move to the upside, and it's been in a pause phase. It's letting the 18-month catch up. It's still holding this big breakout area. The momentum signs are still very bullish, right? Overall, still in pretty good shape. It's not like there's a lot of signs of distribution on the bigger time frame. So if we look at this as a monthly trade, we're monthly and then a pullback towards the 18-month line, we're still not quite there yet, but we're pretty close. But look at what we've done on this time frame. We have the MACD way overbought, and it's worked its way back down to the zero line. We have a low ADX condition, and we're looking for a trend line break here as a signal. Now, when I look at this overall and I see what's going on the daily chart, nice little sideways consolidation. I think if we can break out of this sideways pattern, we're probably heading higher. Now, I'm of the belief that we're going to work our way up towards 4 with the rates, right? And maybe even exceed that a little bit. But to go to a whole new leg to the upside, I think is asking a lot. I don't expect that right now, especially because this never really caught up to the 18-month. It's still pretty extended. I wouldn't be surprised if we just spent more time consolidating here, but with a slightly higher bias in the short term. I think as long as we stay above this key low here, 325 for rates. If we can do that, then I think if the 10-year rates stay at 325 or higher, I think this is in okay shape. The moment that breaks, then I think we have a little bit of a different situation on our hands. And that's really for this index is what I'm watching. I think as long as we stay north of 325, this is okay. I actually think there is a short-term bias to the upside right now. Again, probably want to work our way up towards 4. That would be my thought process right now. Okay, I wanted to do the microsector FANG, right? And so I was going to pick out a couple of the big names to talk about just to follow up and make sure we're staying on top of these because they are the heavyweights. They are the most important stocks. But I decided this represents does a really good job of representing what we're trying to decide what to do with these because a lot of them look pretty similar. So we've worked our way back up to this prior high. We've had a couple really nice setups here, a couple little bull flag patterns, and usually you get a couple of these on each time frame when you start to break out, right, or start to turn the trend. And then I'm looking for something a little bit more complex on this time frame. And you can also see we've gotten stretched away from the 18-week line. Now, the momentum signs are very good. The volume is actually a little nuts. So it's huge, huge volume. That's either very bullish or very bearish. It's either kind of climatic or it's a sign that, you know, people are really coming into these again. And if that's the case on the next pullback, it would lead to a new high. So I'm watching to see, we know money went in. The question is, you know, does it come out? Is there profit taking? Is it violent on the pullback or the pause? And I don't think, based on the daily chart, I'm not convinced that we're ready to pull back quite yet. And the reason is that we've pulled back to the 18. And yeah, the MACD confirmed this peak here, and so did ADX, right? And then we pull back to the 18 day line, and this is now a reverse divergence. You see how this line, if you compare this bottom, compare this low to this low, it's a higher low, and this is a lower low. So we've now kind of set ourselves up for a potential new move. Now, I view this as a short-term swing pattern when it's happened after a big run, right? If you make this kind of a pattern after a big move, just think about maybe we can go to another new high here or test the high or something like that, as opposed to the start of some big move to the upside. But momentum conditions still good based on the ADX. And then I'll just point out this one thing on the hourly chart. We went into the zone and came out and went to a new low. But look at the way this played out and reversed back up. You see how this is more of a undercut and rally setup. And we never got the ADX to climb above 25 during this phase. So even though this was a kind of a harsh pullback, ADX never got above 25 throughout this whole period. Now, MACD came down and then tested the zero line and then came back down. So we have kind of like a double bottomish type of pattern, but more important to me, we've just broken the downtrend line and we're coming back to test this area. So if we can turn up from here, then I think that sets up for a potential swing trade. Again, just based on the fact that we're holding this area. Now, it is getting a little, the 18 is starting to climb at a little bit faster rate. You can see they're starting to separate a little bit above the 40. So it is possible that maybe this is just a shorter term swing, but I would still say that in the short term, my bias is to the upside. When I start to look at the weekly, I start to get a little nervous. It looks like it's getting a little bit stretched to me. Okay, look at DAL. So, I had a question, and it really relates to all three of these next stocks. I've got DAL, UAL, and then Louisiana Pacific. And the person was asking with respect to the distance from the moving average. So if we're stretched away from the moving average, how do I gauge that? Or is there a certain percentage I'm looking at? And I really don't have a certain percentage. I'm typically looking at the distance, just eyeballing it. I'm looking at the price action, and the one thing that I do like to look for is if we've been going up and we keep progressing and making higher highs, and then we get the biggest bar. We've gone up for 3 to 5 bars, and then I get the biggest bar in the move. I'm thinking this is getting late. Right? Now, it might not end this week badly, and it might have a little follow through into next week, but then you start to look for some kind of a pullback. So after a big run, after you start to see daylight, there's a lot of daylight here. You see all this opening. This is an air pocket. When we get a distance between these two, where the price is and really the low of the bar, when there's an opening like that, then I start to look for signs where, okay, there's some sign of climax where, you know, this is the enormous bar, huge weekly bar after a big run. That's normally a sign of exhaustion. We want to be on the sign of exhaustion over the next 3 to 5 days. Is how I would be looking at this. Now, on a daily chart, it's gotten extended. Now, notice what's going on. If we go back to the original lesson, you see how the 18 is starting to climb at a slightly faster rate? So what I'm trying to find are patterns where the 18 and the 40 are like this, and we have a situation where it's more orderly. The price keeps doing this, and it never gets too crazy to the upside so that the 18 stays running at about the same rate. If you have a situation like this, and all of a sudden, boom, what's going to happen? Well, this 18 is going to start to curl up, and it's going to move up faster than the 40 because it's a shorter term moving average. It's not going to take as long for it to move up. That's where we're starting to get into a more of a dangerous situation, and it almost is starting to look like that here. So we want to be on the lookout for these type of situations to tell us that it's getting late. Both of these time frames are telling me it's getting late in the short term. I don't necessarily want to buy a pullback in this time frame anymore. I want to look for something a little bit more complex and maybe potentially look for a better pullback on the weekly chart. But what we love about this is Momo. We've got a lot of momentum here, huge momentum behind this move. So we are looking to play a pullback. I just would say that I'd be looking for a pullback on the weekly chart rather than the daily right now. Okay, UAL, look at this action. This is actually a pretty nice little breakout pattern. It's not as extended. Now, if I look at this chart, there's not as much day. There is daylight, but not as much. And if we look at the price action, it's just breaking out of this basing area. So what I think you'd have to account for, if you want to play this breakout, I really don't have a problem with that. But what I teach guys through my course and through the subscribers that take my monthly research is that if you're going to do this, you have to account for this daylight. If you think you can buy this pattern, this breakout, right, and put a stop right here, and you're going to be fine, I think you're going to have a hard time. You're going to have a lot of stocks come down here, and then they're going to take off. All right, because we've got a little bit, it's made too big of a run to break out. It's overbought breaking out. So normally when that happens, you'll channel around the breakout area and then go. And sometimes you'll fail, but a lot of times you'll just channel around there enough to stop you out. Right? And then it'll turn back up. So you just got to be wary of that. So what I typically recommend, if you like the overall pattern, make sure you give it enough room. And I use average 2 range. I use 2 average 2 ranges and just make sure that I'm giving it enough room outside of the noise so that I don't just get clipped out here and then it takes off again. So that's how I would handle something like that. The other way you could do it is just wait for a pullback on the daily near the breakout area. Okay, LPX. So this is somewhat similar to the UAL. To me, look at the monthly chart. We're just starting to emerge out of this consolidation. Same thing here. The daily chart has air. You see the air here? So if I want to trade this off a daily, I need to get a pullback. So I'm going to do a lesson on this at some point, but we want to avoid retail. So it's wholesale versus retail. Right? We're looking for wholesale opportunities. That's at or near the 18. That's a wholesale opportunity. This is a retail opportunity where you're paying top dollar for it. We want to buy on a pullback closer to the moving average. Okay, so keep that in mind when you're looking at it. Are you paying retail or are you looking for a wholesale? Wholesale is at or near the MA. The momentum is good, so we want to look for some kind of a pullback. I think this has run a little bit too much on the weekly in 2 weeks here, so I'd probably look for some kind of a pullback, at least a little closer to 70 is how I would be handling this. Okay, let's look at CVNA, and I'm just going to go back and look at this last pullback because when I look at the weekly, it looks okay, but I really don't want to do anything on the weekly chart. The volume pattern has me intrigued, and I do want to cover this. So look at what has happened here from the low. I think this is a really good exercise. You see from the declining phase, look at the volume. Now, this is the average volume line going across, right? Now, start to count how many red bars, those are negative volume bars, there are, and then look at what happens from the beginning of this year. From that point on, do you see what's happening? Almost every single bar. The only negative bar was after this big gap up to the upside. I mean, we're talking about a massive shift in the volume pattern, right? Be on the lookout for this. You start to see it developing here. Buyers step in, then they let it back off, and then they step in again, and then look at that. So I think that's something that's really key. This pullback was a little sharp. I don't know if I would have made that. This was a gift. I thought this was a beautiful little setup pulling back to the 18 in a sideways pattern. But we have really good momentum here. I think we want to be looking for some kind of a pullback on the hourly a little bit closer to the 18 potentially. Let's look at BIDU. So this one had the makings of a setup, but on the oh, I know what I wanted to mention on this one is, so if I'm looking at a swing trade, which is a daily chart and an hourly chart, I want to go and look at and see what's going on, because this is Baidu, right? Japanese or whatever. It's, look at all the gaps. You see all the gaps? This is not a good swing trading stock. It's just not a stock I would want to swing trade. Now, once I go up to the higher time frame like weekly, all those gaps are eliminated. I can start to look at this as a time frame I can do. But if I see a time frame that has all these gaps on here, I'm really not as interested in doing it from that standpoint, from that time frame. So the gaps will tell me whether I can play it or not. In this case, the overall pattern really looked okay. We have no time frame, no real trend on the monthly, and we don't really have a trend on the weekly yet. If we were going to do this, it would be on the daily chart, and this pullback was too sharp with the gap down. This is Shop. If we're going to do it off the weekly, we obviously need a pullback. I didn't really have this big gap up and then we consolidate. We never really had a setup until this pullback here, but it went to a marginal new high and then pulled back. So that just doesn't appeal to me as much. It's just not as attractive of a pattern for me. I don't know that there was really any kind of a great setup on this time frame. I guess you could have done it here, coming up off of this after as a 1, 2, 3 setup. I mean, you could have done that, but this part just doesn't appeal to me as much after going to a marginal new high. I think you got to be really careful and make sure price is making higher highs and higher lows when you're doing these types of trades. Another swing trade, but this one actually has the better look on the bigger time frames. I think even if you want to swing trade, and I know the guy who asked me this is looking to swing trade. If he's looking to swing trade, you want to start with the wind at your back off the monthly and weekly. That's pretty much what I do with the list that I send out. I'm looking for patterns that have much more potential to carry to the upside. I like the look of this. This had a 40 to 18 bounce, which you could have played potentially, but because this had really strong ADX, I'd probably be watching for the next pullback here to confirm and look for a higher low. I think that's how I would handle that at this point. Let's just add one more to the list here. Lowe's has been going sideways for a very long time. We have a low ADX condition on the weekly chart. It looks like this stock wants to break out. I think what you could do is look for some kind of a higher low to form near the breakout area. Let it break out and then play a higher low. You can play the breakout if you want, but a safer way to do it would be to make sure that it breaks out and then pulls back and holds the breakout area. Thanks for watching the show. My contact information is listed, and if you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.